Hello, everyone, and welcome to IVMF's VetNet webinars. My name is Elvis Avdic, and I'm Post-Program Support Service Advisor here at IVMF. I help and assist our IVMF alumni with resources and connections to help them start or grow their careers or business ventures. Today, in partnership with IVMF, Bank of America, and People Fund, we bring you an incredible, amazing VetNet webinar on veteran lending programs in partnership with the Community Financial Development Institutions, CDFIs. And today we have our guest speaker, Gary Lindern, and he's from People Fund, and he will let us know more about CDFIs and other veteran lending programs. Gary?
Well, good morning on the West Coast and good afternoon on the East Coast. Really pleased to join with you today. I'd like to start off by giving a special shout out to Bank of America, in particular Michael Winter, who's helped out a lot with People Fund and small businesses, and then also Misty Stutzman, who is with the Institute of Veteran Military Families. She's done a great job. And I see Michael just joined. I already said something nice about you, Michael, so I've already passed that along. So, Miss C, also, thank you so much, and appreciate all your support too, and all the research you've done, and to help veteran families. And just real briefly, I spent 29 years in the Air Force, mostly as a flyer. I'm an old guy, so I spent 3 years in combat in Southeast Asia, Vietnam, and then flew extensively for 18 years, and then was interrupted with a prison sentence to the Pentagon, and then came back and ran some large military installations over in Europe and in the United States. I have a special passion for veterans. And after I left the Air Force, in the last 15 years, I've been working with small business lending out of Texas. We have 7 offices around the state, and we have a special passion for veterans. We do a lot of small business lending, and for that, and in my 15 years, I've made 7,000 business loans, all at what I would call very low and competitive interest rates to help out small businesses around the state. And then we actually have partnerships around the country with other groups like ours to help veterans as well. Anyway, I'd like to, what I'm going to do with our presentation is cover some basic information about access to capital, and then, then dive into what we can do with veterans and how Bank of America has helped us with that as well. So we could bring up the slides.
Before we start, Gary, I would just like to get some ground rules. Everyone out there in the chat, in the participant boxes, you please use a chat box. Is if you open up a bottom right pink arrow, open that up, and you'll see the chat function there. So if you have any questions during the presentation, please use the chat box to post your questions. Just remember, this is being recorded, and we will send out the recorded session after we finish this webinar to everyone that registered. I'll pull up the slides now so Gary can start.
Okay, once again, the introduction, and just want as a shout out to B of A and IBMF. What we'll do is I'm going to start talking about access to capital, and this is for everyone in general. Obviously, it's for veterans and any other small business owner. And in our experience, capital access is probably one of the biggest challenges for any small business owner, whether you're an existing business owner or a startup. And I want to go through just some steps that most of you may be familiar with, but in any event, I want to make sure that you understand what are some of the criteria that banks use to make loans, and then we do too, but we have a lot more latitude than banks in extending credit to small businesses. And then also a little bit of a small discussion on how to choose the best source of capital. And I think that's really an important discussion topic, because there's some very good sources of capital and there's some very bad ones out there. We'll just talk about that very briefly. And then what our experience is that there's a lot of businesses have some talent, they have great ideas, but in many cases, they for startups really can use some assistance, business education and training. And a lot of us around the country provide that at no cost to small business owners. And then, as I said, the ongoing mentorship, business education, and training, I think, is essential to success. And I think most of anybody that's been in business probably can validate that as well. And this is I'm just going to go through this relatively quickly. But I said I can never overemphasize getting your personal credit in order. And the FICO score is used for so many different things in purchasing. And I said business loans, but whether you want to buy a car, you want to buy an automobile or a house, or just get a credit card, all of these things will affect how willing people are to lend you credit. So whatever you do, I would always check your credit scores. And what it does is that, if you have collections or past due default student loans or something negative on your credit report, please do everything you can to take care of that. I might suggest a site that I actually personally use, and it's creditkarma.com. It doesn't cost you anything, and it actually gives you your credit score and updates, and it alerts you if something changes in your credit score. So as I said, there's no cost associated with it. And anybody could go there today if you wanted to, sign up, and you'll find out your credit score. And as I said, it tracks you and it gives you tips on how to improve your credit score as well. So I think that's really a great resource. And I said, I personally use it, and I would suggest that you do too, just to see if anything happens to your credit that may be negative, or there might be something that is incorrect on your credit score, and you have to correct that. Anytime you want to get a loan, people are interested in what kind of income you have. And for a military veteran or any person, tax returns or pay stubs, stable income, retirement, disability pay. There's any number of ways to have source of income. So it's not stated income. You have to verify that for in almost any loan that you want to get. Business plan. It's not really a writing contest. It's supposed to be a living document that really is a game plan for your business. Basically your resume, budget, use of funds, financial projections, and describe your business, and then some market research and what makes you think you're competitive. But in our company, if you have less than a $25,000 loan, we don't expect you, to have volumes of a business plan, but just some of the essentials, your credentials, and then some of the information we just covered. Most loans require collateral, and that would say, basically it's added to support your loan. So some lenders require 100% coverage on collateral. And what you don't need to understand is with lenders, they don't use what you paid for it. It's what the liquidation value is. And typically that's about a half of what you might think it's worth. So there are options for loans without collateral, and we can talk about those in a little while. I'm not aware of any lender that doesn't require some kind of equity. In other words, you have to show a commitment to your business. You can't expect somebody to finance you 100% without you having some, as I said, some investment. And it may be cash, it could be inventory, it could be real estate. And many banks and other lenders require anywhere from 10 to 20% of equity injection before you can get a loan. And then your business must be competitive as assessed by the lender. In our experiences, most businesses that are successful are filling a want or a need out in the market. And who had ever thought that Post-it notes would be something that people either wanted or needed? It was just a very simple concept. It's turned out to be extremely valuable. Character, and really character is being responsive. If you're trying to get a loan, if somebody asks you for some information, if you're responsive, it shows that you're having interest in your business. And then honorable and past obligation. Part of that's your credit score, and it's really a subjective thing by a lender. Sometimes is how do you come across as somebody who really has a commitment to your business, and that is a person that they can rely on for repayment. And most important, I'll have a separate slide on that, is the understanding your financials is essential to any super business. What we found is a lot of people have great talents. Maybe you're a great welder, been an air conditioner repairman, or any kind of business. But if you don't understand your financials and your successes, you're pretty lucky. So what we're going to do is just talk a little bit about three financial documents that are essential to any small business. And the first is a balance sheet. It's really no more than a list of your assets, in other words, what you own, a list of what you owe, and your net worth is basically your liabilities subtracted from your assets. Obviously, you want the assets to be the larger number. The profit and loss statement, that's just a summary of revenues, costs, expenses over time. And typically, you can look at it on a quarterly basis, annual basis, and then your revenue. So your revenue minus your costs and expenses, equals your net income. It's a fairly simple concept, but at the same time, you really need to keep track of all your income and your expenses. And then finally, a statement of cash flows. And there's an old saying that cash is king. And really, it's a measure of the cash in and out of your business, monthly, quarterly, on an annual basis. And really, it's essential about any business with your liquidity or solvency. Anybody that wants to either lend to you or invest in you needs to look at your cash flows. And there's a lot of business, for example, that have all kinds of receivables. In other words, they provided a service and they're waiting for a payment, and they're expecting a certain time. And if it doesn't come in on that time, you find many people with receivables, but they're out of cash, and you have to payroll or any other expenses. So you really need to watch the cash flow to make sure that what's coming in is coming in quicker than what's going out. It's about that simple. Anytime you go and get a loan, you should ask some of these questions. For example, and I'll start off at the top, and these are all important questions, because if you don't know the answer to this, you might become a victim rather than a partner with a lender. First of all, is the interest rate is going to be fixed or variable? Some loans have variable interest rates that increase over time, and some say you must have insurance, either life insurance, liability, or property insurance as a condition of the loan. So there's an expense to you right there that you may or may not have thought of initially. Is there a monthly service fee for the loan? And then if you work with say a bank or any other lender, will you give me a discount if I have a business credit card with you? So those are important things. And then a lot of people have a low interest rate, but the closing fees are pretty heavy. So a lot of times the closing fees are due at closing. So there's an expense that you just need to understand before you go in and commit to a loan. And some organizations, and ours is one of them, that provides education and training at no cost to the borrower. And then finally, there are some lenders that will penalize you for an early payment. You just don't want to be part of that. You just want to make sure that if you're in a position to pay off a loan, that in fact you're able to do that. And then capital options. And it's a simple slide. I'm going to talk a little bit about each of these topics. I'd say over half the businesses that do it by bootstrap and use their own resources. I call it, families and friends, and then you can add fools on there. But the whole point is that somebody's you're either willing to take your own capital, or you have people that are willing to provide capital to you to start a business or continue a business that you've already started. So that's the most common way of business ownership to start off. What I would caution you about is this. Expenses typically, almost inevitably, are going to be more than you may have anticipated at the beginning. So what you don't want to do is expend all of your resources and those invested in you, and then try to go get a loan. That's going to be an impossible task. So there's some benefit in keeping some of your own capital for an emergency situation, and then maybe going out and getting a loan or some money from another source. So I would just caution you to don't. A lot of businesses have gone out of business because they rely exclusively on bootstrap. Credit cards are great sometimes, and I would say beware of introductory periods. The introductory periods are very appealing, but then over time that may not be the case. And if you start making late payments or making the minimum payments, annual percentage rates on most credit cards is going to be in the 29 to 30% annual percentage rate. And one thing you need to understand on a credit card, you can't close it if you have outstanding balance. Otherwise, you're going to have somebody come in and calling on you to pay off your credit cards. Online lenders and payday lenders, I'd say the rule there is fast money is very expensive. So if you want your money by sundown, an online lender seems to be very appealing. And I'll give you just a couple of quick, examples. And for example, there's a site called Kabbage, Kabbage. It'll lend up to $100,000 in very short order. And the annual percentage rate on Kabbage loans is 31% to 108%. So you'll never see that, but they'll say, here's your capital. And then you'll find all of a sudden that people are drafting out of your bank account daily to keep up on the payments. So for example, if you borrowed $10,000 on Kabbage and you were at the 100%, you'll be paying back twice what you borrowed. So you really need to be careful about we've seen too many people go for fast money, and it turns out to be very expensive. So I would just caution you on that. Payday lenders, everybody's familiar with payday lenders. What I would say about payday lenders, at least you can see where they are. The online lenders, you can't see where they are. But a lot of people use payday lenders, and sometimes the annual percentage rate can be up as high as 400% for people who want quick money and then get caught up in renewing or not repaying on time. And then finally, there's crowdfunding. And crowdfunding, people think that's a relatively new concept, but it really isn't. One great example is France gave us the Statue of Liberty as a present, but they didn't provide a base for it. And there's a guy named John Pulitzer, who obviously now he's known for the Pulitzer Prize, but he was in New York City, and he reached out to the public and said, we've received this Statue of Liberty, and we need to raise $200,000 to finance a base or to pay for a base. And he raised that in about less than 2 months, and the average contribution was 75 cents per person. So that's the power of crowdfunding is a large contingent of people who are supporting a cause. And I would say if you want to do crowdfunding, you really have to have something that is appealed to a large audience. And there's right now there's almost 1,200. There's about 1,200, quite frankly, crowdfunding sites. And the top ones are Kickstarter, GoFundMe, and Indiegogo and CrowdRise. Those are some of the top options. The interesting thing about crowdfunding, there's usually a clock on the amount of time that you have to raise your money. If you don't raise the amount of money and the time that that they give you to do it, then it all goes back to zero, and you don't get the capital that you've raised. It just goes back to the original funders. That's something just to be aware of. On the and finally, we're going to talk about and go into the veteran part of it, and that's on community development financial institutions. And a community development financial institution is really a treasury designation, and it's a very stringent process where you're scrutinized considerably to determine if you are suitable to be a CDFI. And what it does is it basically gives you credit for lending to minorities and businesses in low-income areas. And that's and because of being a CDFI, it also allows you to compete for grants and a number of other, favorable financing opportunities. In our case, we also know that women and veterans are an underserved population. So we include women and veterans as part of an underserved population, along with minorities and those in low-income areas. So around the country, there's about 500 loan funds. And I would say and not all of them are created equal. Some, for example, in ours, it covers the state of Texas. A lot of the loan funds cover just a very small geographic area, maybe a county, maybe a city, or maybe a region. But nevertheless, they do provide what I would call favorable capital, to small businesses. And there's some community development banks and community development credit unions, both of which are work favorably with people in the underserved market. Let me go back one, I think. And then I want to talk a little bit about the Veteran Entrepreneur Lending Program. And that is a Bank of America initiative that provided $20 million in low-cost capital to a number of us who are part of the what they call the VELP. And it really is designed to help veterans because, as most veterans know, over half our loans go to pure startups. A bank typically will not lend to a startup or anybody with less than 2 years in business. And so if over half our loans, for example, or the VELP loans, go to pure startups. And if you're like anybody that's in the military, you move frequently, you really don't build up, most of us have never built up a strong nest egg. And a lot of times, just because of all the expenses in moving and TDYs and PCSs, sometimes the credit takes a little bit of a hit along the way. And that's not necessarily all the time, but it's not uncommon either. So the reason that Bank of America stepped up with this capital is there was 5 of us organizations that all were of that $20 million. We each received $4 million to lend to veteran business owners. And so they're in 7 states, and you may be familiar. Main Street launches in California. Colorado Enterprise Fund is in Colorado and 1 or 2 other adjoining states. And Carolina Small Business Development Center is North and South Carolina, and Excelsior Growth Fund is up in New York. So another resource as a consequence of this association with Bank of America and the Veterans Entrepreneur Lending Program is, as I mentioned earlier, one of the sponsors of this is the Institute for Veteran and Military Families, and they provide a lot of extra training and prepare people for entrepreneurship. The Vet to CEO is a veteran organization, and I usually am one of their presenters, and it's really designed to give veteran business owners a lot of information that are essential, to being successful as a as a business. And Oklahoma State also has a program, and typically it's for disabled veterans, and they have a very robust entrepreneurship program, as do all the others. So all of those are great resources that all come together to help veteran business owners. And then just about us, you can read the mission, but basically we lend money to small business owners that can't get bank loans. And then we provide a lot of education and training and resources so they can be successful. And the education and training and all that comes at no cost to the business. We're a nonprofit, we're a CDFI, and then obviously our commitment, as I said, is the underserved market as we've defined them. So that's the minority, women, veterans, and those in low income census tracts. So 97% of our loans actually go to that target market. It's not what we say we do, it's what we actually do. And the next item is what they call an ARIS rating. It's basically the same as AM Best and Standard & Poor's, but it's really unique to the CDFI industry, and it's really a designation that we receive. And in our case, we've got a very strong rating, and that makes a difference in going out and borrowing money from other places. The Small Business Administration actually does not make any loans at all, and so they rely on banks and they rely on organizations like ours. So, for example, we do SBA microloans, and these are loans up to $50,000, and the money actually comes from the SBA to us at less than 2% interest rate. The community advantage loan, we use our money, we get government guarantees up to 85% for making those loans, and we use those extensively actually with veterans that are in startup businesses. So they can go up to $250,000, and then we do SBA 504, which are really commercial projects, either construction or renovations of large facilities up to $5 million. And that typically requires a bank and some equity injection, and the money that comes that we put in there actually is SBA money. And then finally, there's the Treasury Department has a program called New Markets Tax Credits. It's extremely competitive to earn those tax credits. We've received 100 million of those tax credits, and basically we sell those tax credits to banks for a federal discount on their taxes. And all of our projects go into highly distressed census tracts to nonprofit businesses that provide a community impact and create some jobs. So we've done all those in Texas. So there's other organizations around the country that get these tax credits, but once again, it's extremely competitive, and it's really designed to help people in need. A lot of ours go to abused children, abandoned families, people recovering from addiction. There's a whole host of things that we provide that is unfortunately has a great need, but it's not usually satisfied. So that's a great project. We do a lot of work in that arena. Oops, let me go back. And then with regard to working with the veterans, we began back in 2012 providing education and training programs for veteran business owners. And we serve active duty and honorary discharge veterans, and those including the Guard and Reserve, and also spouses. In our case, Texas is fortunate to have a very strong Veterans Commission, so we've actually done joint presentations with the Veterans Commission to veteran business owners, and we've received some low-cost capital from the state of Texas and grants from USA and other foundations. JP Morgan Chase provided us some grants to help small business owners, and then obviously Bank of America helped us as well with the $20 million I referred to previously. And then just a little bit of this is an eye chart, but all the loans we make to veteran business owners are a fixed 5% interest rate. It's the lowest interest rate we offer. But the reality is, based on my Vietnam experience and coming back to a less than receptive welcoming, I thought it was important both professionally and personally to help veterans in any way we can. And we've done that. We've done that. And the interesting thing about veterans, you can see we do it by different categories of lending. Over 50% of our loans are going to minority veterans, and we think it's good and it's interesting, and actually it's intentional as well. And then for women veterans, women veterans represent about 10% of the total military force that retires and the workforce, but 31% of our loans go to women businesses. So we think that's a good thing. So those are things, just a little bit about us. I think the next slide is a picture of me, which is really not too impressive, but I think this is the last slide. And there will be, I think, opening questions. We've been going for about 30 minutes. So if there are some questions, that would be great.
Thank you, Gary. So guys, if you have questions, please use the chat box, type them in, and we'll ask Gary. Gary, we already have questions from Michael. And Michael asked, at what stage should a startup entrepreneur start talking to CDFI about funding? And what do you see from entrepreneur?
I'll give you a couple good answers, or options, let me put it that way. You can come to People Fund if you just have an idea. We can help you develop business plans and maybe a game plan for business that might be helpful to you. There's across the country, there's small business development centers, and for example, in Texas, there are 66 of them, and they're typically affiliated with a university or community college. That's true across the country, and they're really a great resource because they provide business basics, they provide financial projection, business planning at no cost, and they're really great programs. So it's a great way to start, at least if you want to start a business, to go through that process with a small business development center or with someone like us or another CDFI, and we can help you in that regard. So I think, and you know what's really interesting too, a lot of people say, I want to be a business owner, and once they figure out what it's all about, they say, maybe not. And then that in and of itself has value. So it's not for everyone, but we found that about 10% of the workforce of veterans go into the entrepreneurships. And so there's a huge impact of veteran business owners. For example, Nike was started by a veteran, so was FedEx, so was Little Caesars. There's a whole host, so was Chick-fil-A. So I'm saying veterans have started something with just an idea and it's turned into a pretty impressive operation. There's a gentleman that I actually was with over in Southeast Asia who came back and he ended up with Sports Clips. There's obviously a place to get a haircut, and the Sports Clips, he has now 1,600 locations in the U.S. and Canada. So, so veterans, if they have a passion and really want to put everything into a business, they can be very successful. And a lot of veterans actually go into franchises, which is another option where you can just basically get a business, pay for some money, and you have a business. But what we've seen with franchises, a lot of them have ended up actually opening up other franchise locations. And typically, veterans hire veterans. It's not uncommon at all for that to be the case.
Okay. We have another question. It says from Christopher. It says, Gary, I live in Houston, Texas, and I want to start up a homeless veteran housing. How can I go about getting income to purchase low-cost apartment building that needs repairs?
Yeah, let me introduce you I'll introduce you to an organization in Houston. It's called Houston Business Development, and they work a lot with low-cost, affordable housing, and it's for the general population, but veteran specific. And if you reach out to me, you can see there's an email at the bottom of the slide, and if you do that, I'll introduce you to Houston Business Development Institute, and they do great work for affordable housing, and they might be able to help you on the veteran end of it.
Thank you, Gary. And Christopher, just send an email to ivmfalumni@sfr.edu, and we'll connect you with Gary outside. Yeah. Gary, I have a question for you as well. For example, if the veteran is not in the Texas area or any of the other veteran CDFI loan programs that they offer, what can they do?
Yeah, that's a good question. We have, if there's some other affiliations, we actually have 12 partner CDFIs. We cover 22 states. But let me also mention this. Even though some of them are not veteran specific, in other words, where they have that as a target market, almost all CDFIs are receptive to lending to veterans. They may not get it, maybe the interest rate may not be as competitive as some of the rest of us, but nevertheless, for example, I've been around long enough to know who are the credible CDFIs in every state. So if somebody is from a state and was looking for maybe, say Wisconsin, for example. I know there's CDFIs up in Wisconsin or wherever you might be located. We can help you. We also have a site called vet.loan. You can see that as well. And it's called geocentric. In other words, if you go into that site, it can actually determine where you are where you are connecting from, and say, listen, it looks like you're going from Oklahoma, and then we can help you with a CDFI in Oklahoma.
Thank you, Gary. So we might have some more questions. Let's see. So what would you think one of the biggest mistakes entrepreneurs make before they go look for lending or look for funding and things like that?
Well, I'd say the biggest, I would say there's two mistakes. First of all, they want to start a business that's already saturated. In other words, don't open a donut shop next to Dunkin' Donuts. You just have to, first of all, find something where there's a need. And interestingly enough, we have a number of veterans that have, for example, that have started a business fulfilling a need for themselves or their families. I'll give you an example. We have a lady down in McAllen, Texas. She worked with the Border Patrol and had three children and couldn't actually do shift work as was required by the Border Patrol. And they basically said, hey, you have to make a choice, either your business or your family. I mean, you're working here or your family. So we ended up lending her not even a large amount, and she ended up starting a daycare center that provided 24/7 care for children. And it turned out that police, hospitals, all kinds of business have shift work, and that was it was a godsend because she was solving a problem for herself. She also solved a problem for many other people in that area. So it's interesting how that works out sometimes. But that's it. A second biggest mistake is people having unrealistic projections on their business. In other words, they say we're going to break even on the first year, and then we're going to make $1 million in the second year. That's just, you have to have realistic expectations and knowing that it's going to take a little while to start a business and keep it operating.
Gary, from Michael, we have a question. What concerns would you have dealing with the product supply outside the U.S.?
A product that supplies somebody outside the U.S. or gets, I didn't quite catch that, but go ahead. One more time.
So what concerns would you have dealing with the product supplier outside of the U.S.?
Well, if there's a product supplier, in other words, it's coming to a business in the United States, that's fine. But we don't fund internationally. We only fund for. In other words, you can have somebody supplying you products from other countries, and that's not uncommon. And as long as it comes into a legitimate, it's going through a legitimate business in the United States, but we can do that.
Okay. Gary, I have a question for you as well. Have you seen let's say, do you have any favorite success stories while during your time at People Fund that somebody came through that was very successful in funding?
I'll give you two real quick examples. One was a lady who came from Colombia, and she was well educated and came to the United States and couldn't get a job, so she started translating wills from English to Spanish and Spanish to English. And then ultimately she came to us for a small loan and to start marketing her product. And right now she has 500 employees internationally, providing language translation services in about 20 different languages. So she just somehow catapulted that into something that was amazingly successful. Uh, and she called me one day and said, Gary, I'm stuck at $5 million in revenue. And I said, well, it's a problem a lot of people would like to have. But then I'd say even a local one here in Austin, a little coffee shop, we lent them, I think, $30,000 to start their coffee shop. And it turned out to be highly successful. And what's interesting is this couple, they told me they worked every day for 2 years and took one day off. And I said, why did you take a day off? And they said, we got married. I said, well, that's okay. And anyway, long story short, they started experimenting with cold brew coffee. And it was a coffee shop, and it started opening up 24/7, and people were there all the time because it was it was like an Austin environment. None of the furniture matched. When you plugged in your computer, it came out of a wire from the ceiling. It's kind of one of these places people just like to hang out. But nevertheless, they ended up with this cold brew. It was called Chameleon, and pretty soon it was picked up. In Texas, HEB is a big food chain, and then all of a sudden it went to Whole Foods, and at some point they said, you know what, maybe this is a good product, and so they thought maybe somebody would be interested in purchasing that particular product, and they went to a banker and they marketed it. Nothing happened, and out of nowhere, Nestle's came in and offered them $10 million for their cold brew product. So that was and it started out with $35,000 loan. So that's a couple of quick examples. Does everybody turn out that way? No. But what we do know is we help a lot of people sustain a business and grow a business. Particularly family-owned businesses seem to be pretty popular in this part of the country.
Thank you, Gary. When it comes to the CDFI funding the businesses, are there any restrictions? Did you guys have to turn anybody back?
Well, we, in our case, that's pretty common among all the CDFIs. I said, we can lend to somebody that sells Dos Equis, but XXX doesn't work. So, adult entertainment, no. And I call, pyramid lending schemes. We stay away from those. But for the most part, any legitimate business is eligible for funding. And in the case of Texas and other states, we lend to people who are in the country legally with what they call an I-10 or a temporary identification number, and then and they're paying taxes. So we'll lend to somebody that's not a citizen but does have an I-10.
So do you guys provide any mentoring for individuals who are not qualifying for the funding?
Yes. That's a lot of people are not eligible for funding for one reason or the other, and then what we do is work with them and sort of give them, say, if you can take care of these items and we'll help you do that. Then we've had people we worked for 6 months, and they were committed to doing what we asked them to do, and as a consequence everything worked out. So
we have a question from Grant. Do you have any education programs available outside of Texas?
Only through partnerships, I would say, is the education programs in our, and then as I said, we're part of a veterans collaborative, and we actually share our education training, obviously through websites and what have you. But a lot of other CDFIs have education and training programs. I think ours is one of the more robust ones. And I would tell you this: we have the highest risk of all loans, startups, ones that maybe don't have the best credit or collateral. And because of the education and training component, our net charge-offs last year were 0.7%, which is better than a bank. So that's testimony to the fact that the ongoing education and training will help a small business become more successful if they're receptive to it.
Thank you, Gary. Do you have any resources that you would recommend for entrepreneurs to look into if they want to refine-tune their idea before coming to CDFI?
One more time, I'm sorry, I missed the very first part of that.
Do you have any resources that you would recommend for entrepreneurs who are looking to refine their idea before coming to CDFI for lending?
Yeah. As I mentioned earlier, the Small Business Development Centers, there's also an organization called SCORE. It's the Service Corps of Retired Executives, and they help people refine business plans, and I think it's been really helpful. So there's resources out there that really are not insignificant. They're not costly or cost at all. So as I mentioned, Small Business Development Centers, Service Corps of Retired Executives. But I'd also caution you, there's also people out there trying to take advantage of veterans, for example. They'll sit down and say, here, we'll help you write your we'll translate your military resume into something that will help you in the corporate world and charge you $1,000 for it. That's, there's people that just take advantage of veterans, quite frankly. Or they offer them some kind of training services, but there's also always a big fee associated with that. So you need to be a little bit cautious about that.
We have a question from Adam. He's asking, what kind of business or personal credit score do you need to have to get one of these loans?
Okay, we don't, except for larger loans, 200,000. We actually don't have a minimum credit score, and I'll tell you why. A lot of times, bad things happen to good people, and whether it may be a medical situation, it may be worse, it may be some family challenge, that people's credit takes a ding. So we've lent to business with under 600 credit scores, but it's always to businesses that have had these challenges and they're trying to recover from them. So if they want to recover from them, we're going to help them. So to answer your question, there's no minimum credit score unless we get up into the larger loans. Then we'll have a minimum of 600 credit score, which in most banks you need about 750 plus to get the loan. So our threshold is quite considerably lower, and we have, for example, we have some quick turnaround loans that are up to 25,000. We call them flash funds. And this is just basically a 600 credit score and no really bad things on your credit, and you can get a $25,000 loan in short term.
Follow up on Adam's question. He says, so if I need a $200,000 loan or less, what is the terms for payback? How many months?
Well, we typically go up usually up to 84 months. And it's sometimes we'll start off with just interest only, depending on what kind of business it is. But typically it's 84 months. But we're looking at that, and we'll probably go up to 10 years. And so if you look at the principal and interest over 84 months or 120 months, it becomes more affordable. The online lenders lend you that much money and give you 1 or 2 years to pay it back. So that's where the catch is sometimes, is the length of the term. And that was a good question, though.
He also followed up, what is the average interest rate?
Our average is 8.5%, and it ranges from 5% to veterans it goes up to 14% for these quick turnaround, what we call flash fund loans, because it's they're more risk involved, and with the risk, the interest rate goes up goes somewhat. But our interest rates, like I said, last year across the board were 8.5%.
Thank you, Gary. Guys, we have a few more minutes for questions, so please type them into the chat box and we'll ask. And Adam followed up, any collateral required?
We do. Yeah, we do ask for collateral. A lot of our, and I'll tell you, the ones where we don't have full collateral is where we use the SBA guarantee loans, because they're suited for small businesses that do have shortfall in collateral as long as it's a solid business. We like to have, we do want collateral, and we're not as stringent as a bank, and so we're not always fully collateralized. We like to be. If you have it, that makes it a stronger case and you can lend more money, but that doesn't necessarily mean you're not going to be able to get a loan if you don't have 100% coverage on collateral.
Thank you. Do you have any advice or final thoughts for entrepreneurs who are looking to get a loan through CDFI? What they should watch out for, or what should they prepare for?
Yeah,
like that?
I would tell you, just if you want to walk in here and get a loan, is really to be prepared to, with a business plan, a realistic business plan, some sort of, a business that we would think has a good opportunity for success. But also, the more you do, the more market research you do, the more homework you do, the more you study your financial projections. We look for somebody that's has really prepared to come in and make a loan. If you haven't done that, we'll help you get there. But I would say for entrepreneurs, find a product or a service that there's a demand for. It does, as I said, when you go into something that's market saturated, there's a good chance that it's going to be a very rough go of it. But we know one thing about, if you have a job, you have a living, if you're an entrepreneur, that's 24/7. But there's some great rewards for being an entrepreneur, and you control your own destiny, and you also have to understand that there's going to be some ups and downs as an entrepreneur. And the ones that can deal with that and become successful, that's a real credit to them.
Thank you, Gary. Just one more question. If you had one more piece of advice or a book or a quote, podcast that you would like to share with the entrepreneurs, what would it be?
Go for it. Really, it takes a total commitment. And you can't sort of, well, I think I'm going to do this, or I think I'm going to do that. Either you are or you're not. So I would give everybody, I would just say go for it. But if you do, go 100%.
Thank you so much, Gary, for your time. We do appreciate it. And just to remind everybody, this is being recorded, and everybody that is registered for this event will get a recorded link. And I just want to remind you that with that email, you will also get a survey to rate us, and so let us know what you'd like to see in the future. And just to remind you, on October 22nd, we have a webinar on franchising, potential ways to fund for franchising.
Okay, well, thanks everybody for your time and attention, and also for those of the veterans out there, again, thank you for your service.
Thank you all, and we'll see you next time.